Hemang Jani joins us on the show. Hi, Hemang. Good morning and good to see you. Hemang, I wanted to ask you about Metropolis. Vinny just told us about their acquisition that they've done. It appears it's in a vertical that they're not very, very strong. The geography as well is new, and it will add, I think, roughly around 8 to 10% in terms of revenues. What's your view on the stock? It ended at the high point of the day as well yesterday. Your take?
Good morning, Nigel, and thanks for having me. Yes, I think the Metropolis acquisition of Core Diagnostics is surely a big positive for the company because it will strengthen its cancer capabilities and the footprint in the North and the East India. And it will add to almost about 8 to 9% of the Metropolis sales. And the deal size also is fairly reasonable at about 2.2 times FY24 sales. Overall, we think that this will be EPS accretive, and more importantly, because of the kind of offering that it will be able to, introduce, there is going to be a, good amount of earning upgrades that one can see. So overall, a positive view on Metropolis on the back of this development.
Right, Hemang, we speak about Metropolis, we speak about the pharmaceutical space itself. We'll talk about it in just a bit. We'll probably go across to Vinny and she'll tell us about Glenmark too. But apart from that, I wanted your thoughts on the way consumption is likely to behave in the next couple of quarters. Do you think it's keep away from FMCG until you see signs of recovery, or maybe buy this dip that you're seeing? Stocks, blue chips available between 25 to 30% discount from their 52-week highs.
Good morning, Mangalam. I do think that the stocks have corrected because of the way things panned out in Q2, and the start of this review has not been that great, with Godrej Consumer telling you that there is going to be an issue in terms of both volume growth and margins. So we need to watch and see how this whole space pans out, and is it a company specific issue, or we are going to see a broader concern when it comes to the entire category. What we do think is that certain categories, let's say, for example, Britannia, or certain products that Tata Consumer is offering, the pressure is not that high. This is confined to certain pockets only. But we would definitely avoid, buying into any of these stocks till we see, very specific signs of revival in the consumption as far as FMCG is concerned.
Okay. Yeah, I mean, and take Mangalam's point on valuations coming down, but then if you're just not seeing any kind of, stable growth outlook, I guess then it becomes difficult for people to buy in. Anyway, to talk about another sector where we have a lot of data to go over, it's insurance. The life insurance trends are in. LIC hasn't done that well. The private insurers have done a bit better. Hemang, do you like anything here? Because there's still a lot of regulatory uncertainty. You can wake up any morning with something new on the regulation front.
Yeah, I do think, Survi, that there has been certain regulatory developments, and also in terms of the surrender value, related changes have not been that positive for the sector. But I do think that as far as the distribution related, developments are there, it will take some time. I don't see that come through in a hurry. And in the meantime, if you look at the overall operating parameters, most of the insurance companies are doing well when it comes to their annualized premium equivalent and many other operating parameters. So from a stable, 14-15% kind of a CAGR growth theme, this does look good. Within the pack, if you really want to avoid this regulatory overhangs, I think Policy Bazaar looks like a very good, bet, because it would not have all these issues. Plus, being a platform company, and that theme is in the limelight. So I do like that as a space, but HDFC Life is one of our topics at this point when it comes to insurance.
Okay, got it. All right. Request you to stay with us, Hemang. Vinny is joining in to tell us about another company.
At 9:30 a.m. Hemang is still with us. Hemang, actually, since we're talking RBI, let me ask you about financials. Now, because of the CRR cut anticipation, the last week was fantastic for banking stocks, right? I mean, positions were taken ahead of the event, and then the event also transpired. But now what? What are you buying in financials? Any fresh ideas? Anything additional?
I think it's been one of the better performing sectors, both operationally Q2 and in terms of the index, because Bank Nifty has been an outlier over the last about, 4 to 6 months. And given the fact that still many people are underweight, and the fact that some of the private banks as well as PSU banks, the overall growth outlook seems quite good, 13-14% kind of a loan growth, stable margins. So we do like, SBI, Axis Bank, ICICI Bank at this point of time. And we do think that, some of the NBFC pockets which have gone through a lot of stress, I think we would avoid, particularly microfinance related companies. We don't know how deep that issue is, and we are surely avoiding. Instead of that, we would be going with something like Chola, which has corrected about 6-7%. And some of the gold financials, because the gold price again is showing a lot of strength. So Muthoot Finance is something that we would prefer at this point.
Got it. All right. A final question before we let you go, Hemang. What about the metal space? There have been select stocks in there that you've liked. Now the hope is that Chinese, they go ahead and stimulate their economy. And on the domestic front, the government of India gives the domestic steel industry some kind of protection. What do you like from the space?
Nigel, we do think that there is a case for some more up move as far as metal companies are concerned, because the data points in the domestic market and the fact that China related developments would have some positive rub off. What we like at this point of time is JSW Steel, Tata Steel, some of the pellet companies, Godavari Power, because the iron ore price and the spreads as far as pellets are concerned are slightly better. So I do think that as a tactical opportunity, metal companies would give you maybe 5, 10, 12% kind of an uptick.